Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live rates, and then we're going to be talking about USDA loans. Give us just a moment here to go live on all the different platforms. We got the chat up on the screen there. Go ahead and drop a comment there in the chat. Appreciate everybody tuning in nice and early. Happy Friday, everyone. Good topic here today. This week, we've been going back to some of the basics here. All right, looks like we're live here on all the platforms. We'll go ahead and get it started here. Keep dropping comments there in the chat. Drop any questions you have in the chat as well. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and we are a lender that specializes in non-QM loans. And what we do every weekday on this show at 11 a.m. Eastern is go through our live rates, and then we do a deep dive into a different loan type. And today's loan type is going to be USDA loans. So we'll go ahead and get into it. So I'll turn it over to Nick here. First, we'll go through our rates, and then we'll talk about USDA loans. So go ahead.
All right, so covering for Jose today. So first I'll do the live rates for all the programs, and then we'll do a dive into some specific USDA options. So for all of our demos today, we will set up a basic scenario. We will set up a $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan, 20% down payment. We'll set all the demos to a 760 estimated credit score, and we will set an estimated 40% debt to income ratio. So we will pull the rates and it will show the APR for today. It is June 7th, just after 11 a.m. So the standard programs are live. If you'd like a full breakdown, an itemized loan estimate that goes over all the fees that go into the APR, please get with our team members. They would be happy to help you out. But let's go ahead and share the screen here where we can see all of our programs to compare. And we'll make it big. All right, so not so great news this morning for rates. So we did see some of these jump up a little bit. Hopefully we see the markets calm down. They've been quite reactive lately. First option for most borrowers, 30-year fixed conventional primary is what most people think of with a standard conventional loan. Rates as low as 6.49, APR of 6.815, which is just a touch higher than it was yesterday. Now, if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to compare is FHA. FHA does allow more leniency on credit issues as well as a higher debt to income ratio. So the final rates for FHA today, 5.75 rate, final APR 6.699. That includes the upfront and yearly mortgage insurance that is required. So if our customer qualifies for both, FHA could be a touch cheaper, and our customers that need to use it, definitely a good option. It is very comparable. And moving on to our VA option. VA is only eligible for our active service members and eligible veterans. If you are, just be sure to check these programs out. They're definitely favorable. So the VA comes in today at 5.875 for this scenario, with the final APR 6.195 with the standard funding fee here included. So notice this is quite substantially better than a FHA or conventional option. So all of our eligible vets and active service members definitely use that VA eligibility. It is a great option. And moving down to our final agency government option and our topic for today, USDA. Remember, USDA only works for eligible USDA areas, which is typically the rural areas. So first off, you have to look there, and as well as some income limitations. But if there are eligible areas that you're shopping in, these are amazing programs. Rates as low as 5.75 and a final APR of 6.512 with all of the fees included. So notice if our customers usually comparing this to an FHA option, it's a little bit cheaper on the APR as well as cheaper than a conventional option. So USDA, great options for our borrowers that do happen to be looking in those areas. We'll talk a little bit more about that later. Now, these standard agency and government options are typically what most banks or lenders offer, but we have over 5,000 additional loan programs that we can offer. First up is our non-QM alt-doc primary option, which would be comparable to our conventional. If our customer doesn't qualify conventional, we can use alternative documentation such as bank statements, 1099s, P&L programs, all kinds of variations. You can check out some various shows we've done on those topics. But today, this option is probably a bank statement option or similar, coming in at 6.99 rate, final APR 7.322. So notice when you compare this to conventional, if our customer doesn't quite qualify for conventional, it's still very comparable here, about a half a point difference between conventional and using alternative documentation. So definitely recommend our borrowers reach out if they need some help qualifying with alternative docs. And moving on to investment. So first up for an investment property, again, alt doc. This would be a bank statement or similar for an investment property. Rates come in today, 7.5, final APR 7.833. So great option for our investors that need to use alternative documentation. And we'll compare that to our other investment options. So first up is our conventional option. So remember, agency and government. Government does not work, so no FHA, no VA, no USDA, but our conventional agency option does work. 30-year fixed conventional option, 7.375 rate, final APR 7.740, so just a touch better than non-QM today. But definitely recommend all of our investors check out our favorite programs, our DSCR programs. So DSCR stands for debt service coverage ratio. No income, no employment is used. We simply use the estimated rents from the appraisal to determine a DSCR value. For all the demos here, we use an estimated value of 1.5. As long as the property is cash flowing, that's a value of 1 or higher. And that's typically preferred. This option first up is our 3-year prepayment penalty option. Rates as low as 7.25 today, final APR 7.587. Notice that's better than conventional, which is absolutely amazing to use the DSCR option, which is better than conventional. Most investors prefer this even when it is more expensive. And we can sweeten the deal with a 5-year prepayment penalty. Some programs do allow us to do a 5-year option, which sweetens the rates a little bit. 7% rate, final APR 7.316, which again blows conventional out of the water. Now moving on, there are options for no prepayment penalty for investors that don't want a prepayment penalty, just a little more expensive. Rates come in at 7.875 with no prepayment penalty, final APR 8.231. So that's a little bit more expensive than conventional. It's still a great option. Definitely recommend the investors check out our prepayment penalty options to sweeten the rate there. And a couple other non-QM options we have here. First, our 30-year fixed second mortgage option. So a lot of people have a fixed rate first mortgage. That's definitely preferable. Don't want to refinance the first mortgage, but still want to get cash out. HELOCs are an option, but these are more popular now. Second mortgages, fixed rate second mortgages. So for a primary home, we can offer a second mortgage to get cash out. Rates as low as 8.875, final APR 9.099. And same thing with investment properties. We can do a second mortgage on an investment property to get cash out of an investment property and not touch the first mortgage. Rates as low as 10.5, final APR 11.007. So some great options here to use our non-QM programs in a little bit different way. Let's go ahead and switch topics. Again, let me switch my screen. And we'll get into our topic for today. I could actually put Kyle's graphic here. We're going to be talking about USDA loans. So as I mentioned in the demos, we can pull a quick example of USDA, but these are a little bit tricky because they're only eligible in USDA areas. So we'll go in and explain that. So let me first off share my screen. Oops. And whenever we talk about USDA programs, we need to talk about the USDA eligibility map. So I wanted to pull this up today. This is the most important part. So notice this is the map of the whole US. So we're talking about national programs here. USDA is eligible anywhere. So you can come here to this tool, look at property eligibility. You can type in an address, but just for example's sake, let's zoom in a little bit here. So we're in Florida, obviously. So notice the orange areas are all around the major cities. So orange corresponds here, I don't know if you can quite see it, to ineligible. So really what this map is telling us is where it's ineligible and everywhere else in America is eligible, right? So a little bit confusing there. A lot of times the eligibility maps will shade the areas that are eligible. In this case, it's the areas that are shaded that are not eligible. So down here, Where we are in South Florida, you see the whole area is shaded ineligible. But if you get out here into some of the areas in between the major cities, there's a lot of white area here, right? So anything outside of the major cities is eligible. And there's still some major roads through here. And see, there's still plenty of towns and cities you can see here and areas. Even the small cities, though, notice the city of Belgrade, a very small city. These inner city areas would be ineligible, but the areas a little bit outside of town would be eligible. So very important step for USDA, determine the eligibility with the eligibility map. So this is the best tool that you can use. And again, it applies to all of the US, all 50 states, where you can quickly come in and see. Some states like Nebraska, 90+% of the whole city, the whole state are eligible. So great options here. Now let's get into our examples here. Let me see which one this is. Starting over here. All right. First up, our standard example, but we're taking it to 100%. So on our daily live rates, we're doing a 80%, right? So we can compare across all the programs, doing a standard 20% down, but USDA does have 100% financing available for purchases, typically the most common option it is used for. So this is a standard quote using our basic setup that we do every morning, 760 credit score, so top credit score, and a very large loan amount, 500,000 loan amount, but great examples here. So 500,000 purchase price, 500,000 loan amount, 100% financing. You can get rates as low as 6% for a cost of 2.375. And another option here, closer to par, 6.375, has a small cost of 1% here. So great options to use USDA for 100% financing as long as the property is in those areas. And there are some income restrictions and other items as well to consider, but great options. First thing, make sure your property is eligible. Then you can start determining all the other factors, but amazing rates here. Now moving on to another example. Obviously, there's lots of ways to use USDA, but again, 100% example. Let's go to the lowest credit score. So we have options down to 500 credit score. Absolutely amazing. These government programs do have some leniency in areas that the agency and the non-QM areas cannot offer. So USDA does offer programs down to 500 FICO score that we can offer with 100% financing. Pretty amazing. Obviously, the rates are different here. So rates as low as 7.375 will have a cost of 2.5% in points. And a 7.99 rate will have a more reasonable 1.875 cost. But great options here for 100% financing for someone that may not have the best credit, but still needs to take advantage of the USDA programs for 100% financing. And again, going on to our final 100% financing option, another popular request I just want to go over is manufactured homes. So many times in these rural areas of the country, manufactured homes are the predominant type of housing. So just want to make sure everybody knows that USDA is definitely eligible for manufactured homes. A little bit different rate, but same idea, 100% financing. This example is at the top credit. So again, just a little bit different than our other example. I did lower the purchase price because a manufactured home is typically less than the different type of home, single family home or original quote. Rates as low as 6%, final discount points, 3% cost, and 6.625 rate has a more reasonable 0.625 cost there. So great options for manufactured home, 100% financing in those USDA eligible areas. So first step, go to the map, determine where you're shopping. If it does happen to be in an area that is not shaded as ineligible, great option to consider. Let me go ahead and change my screen again. And we'll see if we have any questions.
No, I don't see any questions here. Again, just taking it back to the basics a little bit here this week. And yeah, no questions. So we'll go ahead and wrap it up. Oh, hold on. Looks like we got a question here. Can you do a cash out of equity with this type of mortgage?
No, USDA does not allow cash out. There is some restrictions there. So VA and FHA do allow cash out, but USDA has some restrictions there. So that don't believe they usually have a cash out. There are some rate and term options, but it's typically used for a purchase.
All right. Well, thank you everybody for tuning in. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into different loan topics. So we'll have a new topic here for next week. We appreciate everybody tuning in, and we will see you on Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.